OnChain Revolution roll call. Market recap. You not bullish.
What's up, guys? Welcome back to the fourth episode of the BTC Zone. We have a very special episode for you guys today. Today, we're going to have the great guys from Maestro. Maestro is building something truly special on the Bitcoin ecosystem. They've built on Cardano. They've built in many different places, but it seems like they're going to be calling Bitcoin home. And for this show, we have the great Guido joining us as well. And on top of that, Yago B. It's going to be awesome. It's going to be fun. And if you guys have any questions, put in the chat. We are doing a giveaway. We're giving away 20,000 tokens courtesy of the great guys over at Tokyo. So if you are in the chat, all you have to do is go in and just put anything in the chat. Type in a word. You guys can call Guido George Clooney like you do every week, or we can just kind of hang out, put a yo in there, and I'll add you guys to the wheel. The wheel will be done on the back end of the show, so you do have to stay tuned to the entire thing before we do the wheel spin. So, and if you are here, that actually benefits us as well to make sure you guys get your stuff. So if you do leave, it might be a little harder to get you your toke. But without further ado, let's get this show started. Let's bring in my co-host for the show. As always, we got the great Yago B. We got Guido. What is up, guys?
Yo, what up?
What's going on, guys? So today we got Maestro. Maestro is building, some institutional grade Bitcoin financial platform. What do you guys know about Maestro before we kind of get started?
Look, I've got some real history with Maestro. Funnily enough, Marvin, the CEO, was one of the first people I met when I came into crypto, well before Tokyo, when we were building an NFT platform called DropSpot. He was a real guiding force to me and had a real vision for Maestro. And boy, having those guys come strength to strength since then. They started on Cardano. It's kind of a chain where they were really, I suppose, honing their infrastructure skills and still look after a lot of folks over there, but then became a really big stalwart on the Bitcoin community. If you look at the guests in which we've had on the BTC Zone, we've had Middle, we've had Arch Network, we've had Go Native, we've had Eka, we've had Sats Terminal. Right. And then going into episode 6, Shiz, not 4. This is episode 6. I think Maestro looks after 4 of those, and they're leading projects, right? I think they look after 4 out of those 6 projects already by providing infrastructure. Infrastructure is the unsung hero, I think, sometimes of crypto. They're the guys that are seen and not heard, but they make everything happen and they make it all work. What about you, Gobes? What do you know about him?
Yeah, look, I got a lot of respect for the Maestro team, right? You got Marvin, you got Davis, and we've interacted with them several times, being, the fact that we were one of the larger podcasts and live streams in the Bitcoin ecosystem. And I was really impressed. The fact that they saw they had the foresight to come over here and realize, that Bitcoin builders need help with infrastructure, right? And being able to create APIs and making that easy for a UTXO environment is definitely something that's needed. And they already experienced that with the Cardano side of things. I mean, Cardano was not a walk in the park in the beginning, right? There was a lot of figuring things out. And so they said, hey, we got the expertise in these UTXO ecosystems. Let's try to bring some of that to Bitcoin. And they sure did. And they've been loved ever since they came over to Bitcoin. And I know that they have probably some even bigger aspirations like Tokyo Wallet does to try to support other ecosystems as well. So I'm excited to see what they're planning on the future, and I'm happy that they're here in the Bitcoin ecosystem.
Yeah, 100%.
Yeah, look, I think that they're already. I know. Look, and it goes to the testament that the kind of product that Maestro is, and more importantly, the team over there. I know both the founders really well. They are the kind of guys, right, who reach out and help out even before they're engaged. I know that they were talking to the guys from Eka at some point, just in terms of providing some advice. And as you said, right, the UTXO chains, they're not easy to build on, right? Starting on Cardano, it probably gave them a little bit of a headway into Bitcoin. But, as you guys know, and as we call out on this show all the time, we are doing things with Bitcoin that are not supposed to be done. And it's these infrastructure plays that make DeFi possible, right? So Yeah, look, I think we got Davis on today. Davis, heads up commercial and business development, integral part of the team. I see him around the world on my travels too. He's a great guy and great fun. So let's get him up.
What's up, everyone? Thanks for the warm intro, Guido, and nice to see you virtually. Not quite Dubai, but
Yeah,
we'll still take it.
Yeah, for sure. Dubai or Vegas, bro.
Yeah, exactly.
And
welcome everyone else to my kitchen.
That's okay. That's okay. We'll take you anywhere we can get you. Thanks a lot. I know you've been traveling a lot, and I know that tires you out. I've fortunately had just a couple of months off in Australia. I'm about to start up the travel again, but it can get you pretty weary. I know that. So thanks a lot for getting on. I know you've been on the road a lot. So, mate, we kind of start off this part by asking you about your journey. Let's get to know Davis. Like, how did you get into Web3 and crypto? Where did you come from? How did you go down the rabbit hole? Where did it all begin?
Yeah, so I started off in college. I went to UC Berkeley, and we had a pretty big blockchain community at Cal, and this was like 2016, I would say. So I was always the kid sneaking into like the conferences and listening to like the early prediction markets. I wrote a paper about ICOs. So I was always fairly interested. I invested in crypto, but I didn't dive headfirst into a career in crypto until 2022. So 2022, I got the opportunity to take over a pretty large Bitcoin wallet. It was called Monarch Wallet at the time. I think they ultimately had 500,000 downloads at one point, and I got in through someone who was on the board of that company and signed my contract and started the day FTX collapsed. So timing could not have been better. My job was to fundraise. All the money dried up, but we still made it work. But that was my foray into crypto. Ultimately, I ended up joining an accelerator called Bitcoin Startup Lab, and that was really my introduction to the Bitcoin ecosystem. And I just saw that there was a really big need for infrastructure, which is why when I heard about Maestro, I knew this was a company and a team that I wanted to look into seriously, and ultimately decided to join.
Yeah, man,
Awesome.
that day was crazy, man. The FTX day, I still remember, and like it's kind of like so I don't want to compare it to anything, but it's almost like like a big thing that happened. It was just like I remember exactly what I was doing when CZ tweeted that out. Right, I was like, oh wow.
Yeah.
Like,
Did you just get a job in crypto like Davis though? That had to have been stressful.
No, I didn't know at the time. I wasn't working at crypto. No, but that must have been stressful. But I think we all know where we were when CZ tweeted that out, right?
Yep.
For sure.
Yeah, it was poetic. I remember literally signing my contract like as I'm like seeing all this news unfold. And I'm just like, okay, this can't be good.
It's one of those things, though. If you look back at it, right, it was kind of, I think, signaled a clearing out of a lot of businesses in crypto, right? That possibly shouldn't have been there. I've met the founder of Monarch not that long ago either. That business eventually sold. Was that right? I think they sold that business in the end.
Yeah,
Not sure.
Yeah. Glad you knew it.
Yeah, I did. I knew it. Yeah, it was an early wallet too. Obviously, we're in that background. We're becoming more of a wallet agnostic product, but it's been an interesting journey. And I know a bit about Berkeley too. I think Berkeley is the leading crypto school in the world. Is that right, or one of? I think it was one of the only.
Yeah. We had a blockchain club pretty early on, and the proximity to Silicon Valley makes it just a natural hub for building crypto projects, investments, all the like.
Now, on a side note, my favorite restaurant in the world is in Berkeley, in California. I don't know how much. Chez Panisse, yeah.
Yeah, there we go.
I love that restaurant, bro. It's one of the best. That literally, some people call me a professional diner, but I love that place. So sometimes you got to wait 6 months to get in there, but I always manage to jag a table, whether it's upstairs or something. It's a great place. If you're ever in Berkeley, check it out. Anyway, back to the crypto. Sorry for the side note there. Davis, what are you guys working on at Maestro? Look, you guys came in and took the Bitcoin ecosystem by storm. I know you still support a lot of projects on the Cardano side. You certainly provide us infrastructure on both chains. What's next for you guys? What are you doing on Bitcoin? What are the innovations? What are you guys building?
Yeah, so still very, very supportive and bullish on the Cardano ecosystem. I think that was the genesis for Maestro and building UTXO DeFi. We think the UTXO architecture ultimately is superior and has a lot of benefits that many people might not know. But still supporting Cardano, still supporting the teams there. We expanded ultimately to Bitcoin, and we're powering a lot of the underlying infrastructure and working with a lot of layer twos. But what we've got on the agenda and roadmap now is we're starting to build more institutional infrastructure. So we think it's a unique time in the market where we're starting to see corporations put Bitcoin on their balance sheet, and a lot of the digital asset treasury companies are starting to emerge, frankly, across the world. And they're all going to need infrastructure, and they're going to need to put their Bitcoin to work somehow. So we're starting to build products and tooling ultimately for these treasury companies and ultimately for these companies that are putting Bitcoin on their balance sheet.
Yeah, Davis, I have a quick question for you. We're hearing that, earning from your Bitcoin is really starting to be this new strong narrative. Like you said, institutions are looking at it, but even, Bitcoin maxis are starting to open up to it and saying, hey, we're open to using a scaling solution if we can earn by, with our Bitcoin. Are you hearing that same thing amongst retail users as well? Or are you just solely focused on the institutional side?
Yeah, I think from everyone. We work closely with some of the larger, I guess you would say, dexes that are Bitcoin native, and what they're hearing from the retail side as well is demand for yield products denominated in Bitcoin and paid out in Bitcoin. I think that's critical. Everyone wants more Bitcoin, so
yeah. Look, it's so close to Tokyo's heart. It's no secret that we're currently building a yield aggregator, aggregating a lot of the products over on Sui, but we are also chain agnostic. We're working with ETH protocols now as well as a couple of Ripple protocols. And one of the key things, and then we're working with projects like Eka and Go Native and Middle, which make that native Bitcoin operable. And I think that is. There are other solutions as well. We're putting a solution in place with Garden Finance, for example, which is just launched on Sui, which will still enable the swaps. But I suppose it's taking some of those bridges out. And people still want to hold native Bitcoin in their wallet. It is at times guarded with suspicion when you are kind of selling that into a synthetic version, and how do you get it back out, and how does that kind of make people feel? The minute Bitcoin leaves someone's wallet, it is digital gold, right? So the minute it leaves someone's wallet, they start getting jittery about, am I going to get it back? Because it's so tightly held now. How do you feel like things like the MPC layers are coming along in terms of products like Eka and Middle, if you know those, and the use of native Bitcoin?
Yeah, I think it definitely depends on the customer segment. So, for example, I don't think digital asset treasury companies are going to be comfortable putting yield in a vault or a non-custodial source. So they're going to need some sort of hybrid that ultimately stays with the custodian. And you're seeing this with companies that are offering yield products. Like they work through custodians, and it's a lot more permissioned. There's contracts, and it's more of like off-chain finance that's leveraging Bitcoin. So that's going to be one customer segment. Another one is going to be the retail users, who I think will be more DeFi native and apt to put their Bitcoin in custody of these execution layers, and have like a synthetic token that they're able to do more DeFi with. I think I mean, we'll have to see once these execution layers go live, but they, I think the user experience of not having to wrap and then be able to interact with the smart contract is going to be far superior, and I think will encourage people to still use their Bitcoin because it's one click from their Tokyo wallet.
Yeah, look, I absolutely agree with you there. That is the way of the future, and those MPC layers or the computation layers, are certainly the ones that a lot of teams are focusing on. And I think it's also just ease of use. In terms of, you mentioned that you guys are kind of attacking that insta market, that institutional market. How have you guys found, the approach for customers? Because we are talking about products here, right, which are quite revolutionary, and they are products that are new and sort of cutting edge. Are institutional, sort of investors, easily approachable for these kind of products? Is it something that they, that they show interest in, or is it still like, I just want to hodl my Bitcoin?
I would say it's still very early. So right now, institutions are mostly figuring out how to compliantly put Bitcoin on their balance sheet and hold Bitcoin. Like that in and of itself is very novel. But the next stage and the next evolution is actually putting your Bitcoin to work and being able to earn some sort of yield on it. And I honestly think that's the next evolution for Bitcoin as a store of value, generally speaking. To have a true store of value in regards to a currency, you need to be able to park it somewhere safely and earn 4 to 8% yield on it. So I think this is essential for Bitcoin.
Yeah, great.
100%.
What do you think, Shiz?
Yeah, I saw a question because I'm kind of going through your website right now, and the one thing I see up here is chains, and I see Arch Network, I see Midnight, which is awesome, and I see Dogecoin. I wasn't expecting to see Dogecoin at all.
UTXO.
Yeah, that is true. So, what are you guys doing on those three that I just mentioned? Dogecoin, Midnight, and Arch.
Yeah, we're supporting all of these chains and supporting the projects that are building DeFi ultimately, for each of them, and we will have middle on there soon once middle goes live, which should be fairly soon.
I think they just put a project live on mainnet. Like it should be that's like any, if not any minute, if it's like it's any minute. They're close.
I think this is breaking news. I don't know. I don't know if this is out there.
Oh, well, we had Middle on a couple of weeks ago, but I had a meeting with Middle during the week. We're doing some stuff with those guys. We see a massive resurgence in ETH as well. I think that a lot of people had the shovels out burying ETH about 3 or 4 months ago, saying that the chain was dead. But we've seen a resurgence in the token, and it's still the second biggest chain, right? Like, and it's the second biggest by a long way, not just by a bit. Right. So if you look at yield products over there, you've got products like Beefy and, all of the original yield products over there are still going so strong, and they've got so much TVL over there. So I think those are impossible to ignore. So glad to hear that you guys are working with Middle. What's next on the circuit tour for you, brother? Where do you head?
Yeah. So I'm heading to Token on
See you
Friday. Yeah, see you guys there. That'll be a good one. Very excited. I feel like tokens are always some of the best events. Marvin right now is at Korean Blockchain Week, and I really can't look past anything besides tokens. So that's the main thing on the agenda.
I got a message from Marvin this morning saying that he was on a plane to Seoul. So I'm leaving my run really late, but I may just get there in time. But I'll definitely see you at Token. Last minute travel as kind of always. Mate, just in terms of some closing thoughts for you guys, I know that you've been on the road a lot, so we won't keep you too long. Where do you see yourself? Is there any future chain expansions that you guys are looking at? What goes on from here?
Yeah, I mean, I think as an infrastructure provider, we're certainly going to continue to double down on having the fastest, most reliable, and secure infrastructure across all UTXO chains. But ultimately, what I'm really excited about is the shift to institutional products and institutional infrastructure. It's just an interesting time where you're seeing the convergence of Web 2 and Web 3, and you're really seeing it through corporations putting Bitcoin on their balance sheet. So there's going to be a lot of financial products that have to be built in this new environment, and I think Maestro is in the perfect position to really support these changes.
Awesome.
Really quick, I want to ask you about that. This is my last question about the institutional stuff. But you mentioned that that segment wants more of the permissioned approach, and I agree with you. But also, it seems like maxis are softening up to that, like the traditional Bitcoin maxis. So they're like, "Hey, look, these treasury companies, they're big money." And maybe we can all get on the same page in terms of maxis, degens, and all these things, because these products, in a weird way, could bring the ecosystem together. Do you see that as well, or do you see it in a different light?
Yeah, for sure. I mean, I think there's, like, with most things on the internet, there's ultimately like a long tail effect of what people are comfortable with and what people want. So the job of builders is to build products to suit their customers' demands, not necessarily what they want. So there's certainly going to be people that want cold storage, manage their own wallets, but then there's going to be people who are less comfortable with crypto and DeFi and want to have everything much more permissioned and insured. And they'll pay for that. They'll risk their assets in order to do it, but that's ultimately their preference. And the job of us builders is to cater to all the long tail needs and desires. Also, I just shared a website, or our website, which is gomaestro.org/institutional. So if you want to check out more of our institutional product and features, you can go there. So welcome to the Bitcoin economy. We do think it's ultimately going to be, I mean, Bitcoin already is top 5 most valuable asset in the entire world, but as far as like a financial services platform, it's going to keep growing in capability.
Yep. Awesome. Mate, you've been a great guest. I'll let you get some rest. We'll give you an opportunity to repost this. We'll certainly drop all of your links into the comments or into the post. And yeah, it's been great to have you on, and see you at Token.
Yeah, see you at Token. Thank you guys. This has been super fun. Love to come back again. But yeah, until next time.
Appreciate it, Davis.
See you guys. Bye.
Well, absolutely awesome. Guido, another great job with that one. But I would love to continue this if you have the time, because I would love to dig more into
we've got plenty of time left. Davis actually sent me a message before the show today saying that he'd been traveling and he's really a bit under the weather. So he fronted up and he actually did a really great job. So well done, Davis, and thanks a lot. It was great to have him on.
For sure. And one thing cool about Maestro too is these guys don't seem to be like just building in their one sector, right? But it coming from Cardano to Bitcoin and now building for Arch, Midnight, and Doge really kind of shows you that they are here to build whatever is needed, and that's really awesome to see from builders. They're not stuck in their own mess, right? That's one thing really awesome to kind of see about these guys, Marvin and Davis and the team, is that they're really open to kind of building what is needed and don't really care if it's on Dogecoin or Midnight, right? It's really cool.
Yeah, I think they started with the UTXO chains, right? But they, as I said, I know that they were providing some assistance to projects like Eager. Marvin had said that he'd been giving the guys some advice over there from the Bitcoin side. And that's just, as I said before, the kind of guys that they are. So yeah, they're a really great team. And as I said before, look, it's project. When you look at projects like Tokyo, right? Tokyo is known for its ability to index assets. So if you haven't downloaded Tokyo, anyone in the audience, by the way, get on there because there are huge advancements coming. And our desktop is dropping some alpha. Our desktop is really, really close. And we've got some surprises when we roll the desktop out in terms of a new product that we're rolling out, which we'll share in the coming weeks. But yeah, it is really next level. So get on there now. It's worthwhile doing that. But what I was saying in relation to indexing products, we use Maestro for both Cardano and Bitcoin. We use Nexa over on Sui. Maestro is obviously not there. But those indexing products for businesses like ours are absolutely essential. We in the Tokyo experience, we provide a live listener is what we call it, which actually shows on-chain transactions to the second. So if you're trading dog on Bitcoin, you can see those token sales updating right by the second. It gives you buy and sell orders, for example. That stuff is essential to provide for dexes like Sats Terminal. I know that Stan heavily relies on Maestro for that kind of indexing service, which gives that kind of that live read and that live feel. Again, those things for decentralized projects are absolutely essential, and it's products like Maestro that make that happen.
Yeah, I'm excited that they're going into the institutional side because people that pay attention to the Bitcoin ecosystem from a retail perspective, they'll follow up and see like all these institutions that are excited about earning off of their Bitcoin as well. And it's a different dynamic. We expected that to be a big effect on the overall space, but I think more than any area, Bitcoin is going to be positively affected because, like he made a great point. Bitcoin is one of those, it's always had the narrative of what is it called, store of value, right? And what's the next evolution of store of value is earning off of that store of value, right? Because you don't want to get too risky, but if you are going to get a little bit risky, I guess that would be the next thing is earning yield off of it. So it makes sense for Bitcoin-minded people, and that's why I think these maxis. I rarely give the hardcore Bitcoin maxi credit. I'll tell you that, but I do think that they're opening their mind because of the institutions coming over, and they like money. And they see that flowing over here, and that's going to benefit everybody. So if we can all get on the same page. So,
well, who doesn't like to earn money, right? Like, and if we look at this compared to IRL products, any IRL investment product, and you would now call, you heard it from Davis's mouth, right? Bitcoin is the fifth largest or the fifth most valuable asset on the planet. And that sits behind physical gold. I think Apple's in there as second, as in Apple stock. I think it might be
Nvidia.
Yeah, Nvidia. Yeah, but I know that the Bitcoin's 5. And look, let's be honest, they're not making any more Bitcoin. It's in finite supply. Gold, maybe some time, but that resource will eventually run out. Right, like it's not that's what happens with those resources. Companies come and go. I can't see Apple going anywhere, nor Nvidia at this point. But that store of Bitcoin is such an amazing thing. Now, when it comes to the institutional investors, I know that we're still so early, and I think Davis also alluded to that. I think we're at 4 or 5% of Bitcoin, which is currently being put to work. That is a massive segment of the market. Now, if you looked at the remaining, and I would hazard a guess to say that most of that Bitcoin that's put to work at the moment is not being put to work by your businesses like BlackRock or your big institutional holders, or the Michael Saylors of the world. It's not being put to work by those guys. Those guys are probably the ones that are hodling Bitcoin. It's the degens now that are putting Bitcoin to work. The ones that are able to understand complex structures, right? So that may be creating a wrap token at the moment, or using XBTC, the OKX product, and giving themselves, a wrapped version of the token. They're then going to places like Sui or Ethereum and investing them into yield products. In a lot of cases, after switching those for a liquidity token, or for a liquidity token, right? So like, or an LST. Now that transaction, like, to some of our audience today, that probably sounds really complicated, and the reason it does is because it is, right? Products like Maestro and what Tokyo is really driving for is making those products accessible for people who don't have the ability to, I suppose, buy, or not the ability, but don't understand the complexities, right, of switching to or creating a wrapped token, or using an MPC layer, then taking that into having a spendable native token on somewhere like Ethereum, then having that token swap for, say, an LST, right? For that to then go into a yield bearing product, and then to do it all in reverse to get your yield back out. That's still a very complex journey. And, I think the businesses that are going to win are going to be the ones that simplify that and make it really easy for institutions and maxis to be able to get yield.
Yeah,
Yeah,
100%. I mean, that's really what it's about, right? Like, it's about growing the Bitcoin ecosystem. And how do you do that? Well, institutional wise, right? Just like you kind of mentioned. Do you think that, like, over the course of the next, like, let's say 12 months, like, we are seeing adoption, but I think the adoption is kind of going more towards ETH right now when it comes to institutional. Do you think that comes back to Bitcoin with these institutions, or do you think that maybe the yield on ETH is actually, just kind of staking it on chain is actually more glaring to a lot of these, like, Tom Lee type of guys?
Look, I think that we've seen, as I said, we've seen a big resurgence in ETH. What I see is that Bitcoin is still going to be the king, right? Like, it's the biggest store of value. We're talking 2.2 trillion in liquidity sitting on Bitcoin. And we've unlocked. So I use that stat all the time. Every time you unlock 1%, you unlock 20 billion, right? In terms of liquidity, like, that's a huge stat, but it's true. And based on figures, we've still got 95% of that to unlock, right? So I still think that Bitcoin, the projects that make Bitcoin operable and make them yield bearing are going to be the ones that ultimately win out. And I think that, crypto being the community that it is, a lot of those projects that are working on that stuff are working together to try to make that happen, and present that in a really clever way. So look, I know that there is a huge Bitcoin Sui push. I know the guys over at Miston Labs are working, hard on a bunch of infrastructure that make that happen. And the development team over at Sui. I know that there's a bunch of ETH projects that are trying to make their products available for native Bitcoin, but I still feel like the ETH community is alive and well when it comes to staking, and are happy with their environment there. So it's a moving feast at the moment, and time will tell who wins out.
That's why I think this push for the yield bearing products and Bitcoin's even happening, is because they see, like, a lot of the core Bitcoin people see what's happening with the institutional interest on earning, 5-6% on Ethereum by staking on these validators in a safe way. You're talking about
No
billions
trusting.
of
Yeah.
you're talking about billions of dollars though, right? And Davis made a great point. A lot of them don't care about the custody. They just find a trusting custodial third party, right? Whether that's Coinbase doing it or whoever. But Bitcoin, I think there's this gold rush, right? Like, I know Tokyo is on top of this. There's other projects that are on top of this, of creating this Bitcoin yield bearing environment. And that, to me, is the most bullish thing for Bitcoin's ecosystem. And I know that we talk about scaling these Bitcoin assets and that Bitcoin assets, but let's get the Bitcoin to go up to 180,000, 250,000. And I promise you, there's going to be profits that trickle into those Bitcoin native assets eventually. And how you do that, you create amazing Bitcoin yield bearing products. And that's where we are right now. And I think we got to feel a bit lucky to be a part of that, but it's being a little overlooked, I think, by like crypto Twitter and stuff like that. But the builders like Guido and his team, and you got Maestro seeing all this stuff. They're the ones that see it because they're building it, right? They're a part of it, but it's not being talked about. It's not sexy, right? Super sexy yet. It will get sexy, I promise.
Yeah, look, mate, we're banking on it. We think it's the hottest chick on the beach. But like in saying that, we think we still think there's plenty of time to get it right. And one of the key points, and Davis touched on this a bit too, is security around this stuff. People work so hard to get their Bitcoin, right? Whether I don't care whether you're mining it, whether you're acquiring it over peaks and troughs or dips, whether you're going through multiple cycles. Think about some of these early guys have been acquiring Bitcoin for, since 2012, right? The early guys, that has turned into a virtual gold mine for those guys. So for them, they're like, you know what? I worked really hard. I was early. I'm holding this. My Bitcoin continues to go up. Why would I put that at risk? So, projects like us and certainly I know Maestro would be the same. And, I know with a lot of the yield, products that are around, whether they're on Solana or Ethereum, or on Sui, they're working really hard to kind of create the right security layers around that. And make sure that people feel safe depositing their Bitcoin, right? As I said before, I feel like a key element of that is going to come from the MPC layers, which means that you still custody, which is kind of like a liquid staking sort of mechanism, right? Where you're holding where you're still holding the Bitcoin in your wallet, even if it is vaulted and you can't spend it, it's still sitting to an extent in your custody, right? That's with the multi sort of, you've got half the keys, the project has half the keys, and often to release that stuff, so it's secure, and it's getting that security message and getting that safety message through to markets, right? So that they understand that this precious resource that they've been, mining, gaining, getting through cycles, building up over a period of time is safe and secure. And that is something that projects all need to look at, because it only takes one protocol to have a security breach or to have an issue, and for a whole bunch of holders to lose their Bitcoin, and it sets the industry back.
Yeah.
Yeah, 100% for sure. You mentioned cycles, right? I'm just curious. Like, what's your prediction for this? Is the 4-year cycle dead? Are we about to enter a new style of super cycle to where basically what happened in the year 2000 with the tech companies? Are we about to see that with crypto?
I'm 100% on board with that. People keep talking about.
We are
people
too.
keep talking about. Is October going to be the start of the bull run? Are we going to be hitting the bears by February? Is it going to last for 6 months? I don't feel like it's going to be. We'll ever see those massive, peaks and troughs again. Look, I'm sure that we're going to see some sell off at some point. People take profits, right? That's part of being in crypto. And the smart investors, they DCA in and they DCA out, right? So, and, let's face it, for a lot of the maxis here, picking the top of the market has been an enormous sense of wealth for those guys, right? They want to see the cycles continue because they switch their Bitcoin back to stables, right? They wait for the bears to hit, they try to pick the bottom. But either way, they're DCAing out and they're DCAing in, which has created massive profits for those guys. Myself, I think that as Bitcoin and crypto becomes more normalized and becomes more of a, you know, an everyday tradable asset. And as it creeps into things like institutions, and as it, you know, creeps into everyday life, and I'm talking about things like spending with cards, or, you know, spending crypto directly with cards, people being bankless, you know, and storing their money in crypto. I think as we see those things happen, we're going to see less of these kind of, you know, super cycles occurring, and we're going to see more of a gradual, continued increase. I think there's still going to be the dips, because, you know, as we know, for the smart traders, you know, dips are gifts, right? Like they live for that stuff. And I also feel like, to some extent, the maxis and the big institutional holders, you know, they cause some of these dips, you know, like you know, it's sometimes mum and dad investors, right, that, you know, that have you know, some of their superannuation in Australia, for example, like, you know, you can invest part of your superannuation. I know some countries don't have that, but 10% of your income in Australia goes to your superannuation, right? Like that's mandatory. So you've got huge stores of value that are investing into these super funds. Now, a lot of people put that into, you know, are starting to put those kind of, you know, their family nest egg into things like Bitcoin. It is a adventurous investment for those guys, right? But, you know, they see Bitcoin going up and they jump on board that stuff. I almost feel like sometimes, and you see the sell-off on Sundays all the time, right? It's crazy. It's like every Sunday. What do they wait for until everyone's in church in America or something? Like, you know, like
the past two Sundays. The past two Sundays have been rough for sure.
If you look at the past 20 Sundays, right, and we might look at this stat, right, in you know, maybe next week, but if we look at the dips on 20 Sundays, I reckon they're like, it's been 75%. It almost looks like it's kind of, you know, it happens so consistently, right? And it also, the massive dips happen before positive financial news. Now, you got to say, these institutions and these maxis, they have the power to dip markets. So do they start a dip? Those families that have invested that kind of nest egg, they're like, hold on a second, Bitcoin's dropping. They start selling off, and it just takes a bunch of maxis to, you know, to get together, and, you know, they buy a 20% dip. You know, like I'm almost convinced that that's sometimes what happens. I'm not calling sinister on everyone, but, you know, you got to say that it happens. So it's happening so much that, you know, it feels like people are profiting out of this. I don't know. What do you guys think?
Well, it kind of reminds me of how gold was, right, at one point. So this is the gold chart from like 97 to where it is today. If this is basically up only, right? And I think Bitcoin ends up, this is a 3-month chart. So this is every one of these candles is 3 months. It feels like, you know, since like, you know, the early 98, 97, when it got its ETF, it's just been up only. And if you look at Bitcoin's been very similar, except Bitcoin has these huge upwards and downwards. But I think we're about to enter what we've seen from 97, right? To where it's just kind of up only.
Yeah.
I think the gold ETF launched, I want to say so it says 2003 or 2004 in the US.
Okay.
So if you go around that time frame, you
Right
can
here.
see it starts to pick up. You know, before that it was a bit sideways. So, you know, a lot of people comparing this cycle to the ETF cycle, right? So, you know, Bitcoin did see some energy push up and stuff like that, but one thing I want to ask Guido is, you know, being a wallet builder, I think maybe I misheard you before, but I think you said maybe you compared wallets to bank accounts and things like that. You know, once we get more mainstream to that kind of perspective from society, I think we don't pay as much attention to the volatility of up and down. And do you think that we steal the bank's business? Do you think that happens?
Look, I think that, you know, certainly from Tokyo's perspective, the wallet market is significantly changing, right? And our products pivoting to sort of suit that. We see more value sort of occurring in almost creating products, which you'll always have your Tokyo wallet. We'll certainly encourage people to use that product. We will continue to develop out that product, but we see that product for doing things like on and off ramping and having your Tokyo card, and for being a custody solution and for being able to trade, layer 2 tokens. But we're almost creating products which become wallet agnostic, if that makes sense. So that means that you can load in your Binance wallet, your Tokyo wallet, your Phantom wallet, your Coinbase wallet, still into a Tokyo product, right? And have all of those go into an overall portfolio view, right? And then actually provide, a kind of AI lens, if you like, which will assess what's in your wallets and give you yield options. Right, that is a very big shift from just being, a non-custodial wallet. Do I think these products are ultimately going to take huge stores away from banks? Absolutely. As people become more familiar with crypto, as they become more comfortable, they start, and as crypto is spendable, I think is what you'd say, right? So if crypto becomes spendable from these products through credit cards without having to offer on and off ramp and go to financial institutions, I see you'll be a huge shift in the store of funds to being held in these products.
Yeah, it makes a ton of sense, and I can't imagine a world. Well, I can, I guess, now I've been in crypto for so long. That kind of portfolio view of having, it's like having like 5 different bank accounts, but they're all working for you. You know what I mean? Versus just your online bank is one account or 3 accounts within that same bank. And what am I going to do? Put my money into a CD? No, I'd rather have all these awesome yield bearing products. And I think there's going to be easier pathways to wealth building, but you got to be educating yourself. And that's what shows like this is about.
Well, look, I think that, what you say is, crypto has the opportunity to break traditional financial molds. And what I mean by that is, did I say molds? Break traditional financial molds. No, molds, let me rephrase. But it has the opportunity to break molds. I might also just say, hey, guys, if you want to get in the draw for your tokens, first of all, chips and dip. You did win last week. All you've got to do is provide Shizzy or your Gobi your wallet address. If you do that, we'll get your tokens across to you. I think that's the procedure, right, guys? So
you can just DM me.
Anyone. So just DM any one of the 3 of us, and we can help you out. We might actually end up setting up a Twitter page at some point for this show too, so that you can just DM the page. In fact, we'll put that on our to-do list for the week. Also, just note to audience too, if you've got anyone that you would like to see on the show, an interesting guest or someone like that, or someone who you feel would be great, we'll take show suggestions. And anyone how many we got in the crowd listening this morning? Tonight?
We got about
4, 5, 6, 7, 8, 9, 10, 11. So we have 10 in the chat, and then 1 on X commented. Mr. Sheedy commented on the page itself, so I added him. So 11 altogether.
Yeah,
those are participants into the conference.
So they're participants to the competition. But what I'm saying is to the broader audience, get your comments in there. All you got to do is make a comment. It could be about Shizzy's hat. It could be about anything about any one of us. Just put anything in there, right? And we'll put you in the draw to win the tokens. It's pretty easy. We need to get the comments going. We love seeing the comments as we're going along too, by the way, guys. And get your questions in there if we've got a guest as well. So just some housekeeping. What I'm saying is that, I see that as a huge opportunity for businesses to create new financial products that do break the mold, right? Because traditional, I think she's hit the nail on the head there, right? If you've got a bunch of different bank accounts, right, you're probably not, there aren't financial instruments that allow you to combine the wealth of those bank accounts and put them into, a single portfolio view and allow you to easily, I suppose, manipulate and spend those assets and put them into a yield product, right? Like that's not available to traditional bank accounts. When you look at crypto, we have the ability to be able to chain up transactions, for example, to be able to, see multiple balances because they're available, that information's available on chain, right? To be able to have entry points where people can, join a decentralized or non-custodial product by actually, applying their different wallet balances securely. So we've got the opportunity to do those things where the traditional financial institutions don't. So I think that's where you're going to see real evolution.
Yeah, and
Yeah.
what's going to happen to the banks? Are they going to join, do you think, or do they kind of just fall off, kind of like the yellow pages or the newspapers did with media companies?
I think the big financial institutions are a lot savvier than that.
Mhm.
I think a lot of them are starting to put out stable coins. I think there's an Australian stable coin coming out, from my home country. I think all the banks have got crypto departments. A lot of the banks are taking on Bitcoin deposits now, so that you can hold those in your portfolios. I think there's going to be a meeting at some point. So what I'm saying is that we will see a meeting where we see banks, coming down to meet the traditional crypto projects, right? So by that, I mean, we will see that kind of environment where, businesses like Tokyo and, and even Xverse and a lot of the kind of non-custodial wallets that trade a lot of like layer 2 tokens and have these yield products will ultimately get to a point where the financial institutions will come down and there'll be a kind of a melding of some of those products at some point.
Yeah, I agree. I think banks kind of lose the checking accounts. I think checking accounts will kind of be going away. They'll be kind of wallets, but I do think the savings accounts, kind of what you mentioned, they can get deeper and deeper in yield. Obviously, with the Genius Act, the stablecoin providers cannot do yield, but that doesn't mean a third party can't. And if banks are kind of getting kind of savvy and can learn how to do decentralized finance a little bit, well, you might be able to set a risk curve for these financial institutions to say, hey, I want to be a little risky, and then they can go find you the yield for you. And that's very normy. For us, we're going to be able to do it ourselves. We're going to be able to take our money and go find the yield in our way, especially like a product like yours, where I can just have potentially have just stable coins there and the AI does it for me. But I think banks are going to adopt that. And I think that's why you guys are kind of ahead of the game there with that type of product, because I do think that that's the new banking product in the future. They getting yield and taking a percentage of that, while the checking accounts are all due with kind of like crypto wallets with the debit card.
Yeah, for sure. We haven't had too many more comments. Do we spin the wheel and make a deal?
Let's do it.
Yeah.
Good luck, everybody.
Shuffle it up. Let's spin this thing. And next week, I think definitely get the Tokyo account too. I think that because a lot of our audience are Western, so a lot of them are kind of late for them. But I think your audience over on Tokyo Wallet will definitely
Mr.
be up for this.
Sheedy. Yes,
Shout out
yes,
to Mr.
Mr.
Sheedy.
Sheedy. Yes, he's an OG for sure in the Bitcoin ecosystem. So congratulations to you, sir. Shoot a message over to me or Shizzy with your Cardano wallet address, and then we will get that over to you.
Yeah, take a screenshot, Cheedy, if you're watching. Screenshot of your wallet address, and then send me the wallet address too, and we'll get that. And you too, Chips and Dip, send me your wallet, and we'll get that over to the Tokyo guys.
Better still, open up. Better still, open up a Tokyo wallet, which can have your Bitcoin and your Cardano tokens sitting in the same wallet, and we can transfer them straight into that.
And Sui too now.
Yeah, and Sui too. Yeah.
Vader Time says, "Hey, has Tokyo thought about building on Hedera Hashgraph? Have you guys ever had a talk with those guys?"
I did respond. Just hit me up on I think it's Mr._Guido on X. I'm pretty sure. Let me check.
That was a really
I don't think Vader Time is that kind of guy. I think he's just a fan of Hedera. I don't know if he actually works for the team, or anything like that.
So I'm just going to say, if you hit me, what I was going to say is, if you don't, right, okay. Well, we're looking at all chains. We will come across, we've looked at Hedera briefly. For us, probably next will be XRPL, so the XRP Ledger and Ripple. But we are actually looking at a bunch of products which will see us live from a layer 1 perspective on a bunch of different chains. And I'm talking, the top 10 to 12 tokens will happen very, very quickly for us over the next couple of months, which will mean that in Tokyo, you can, on and off board, you can trade layer 2 or native tokens on Bitcoin, Cardano, and Sui. You can spend with your credit card, and then you can swap, between that wallet, the top sort of, dozen tokens as well. Including stables, right? So, Solana, Ethereum, are not far away from us as well in terms of those deeper integrations, and Ripple, as I mentioned. So that's all on the Tokyo roadmap and coming soon. Not to mention our desktop product, which our market has been screaming for a long time. But I'll drop a little bit of alpha here just before we finish off. The Tokyo desktop wallet is going to function unlike other wallets, being that we are such a mobile-driven function. And part of the reason that we took some time to get into a desktop extension, right, was that we were, desktop extensions can be a little bit vulnerable to security, but the way in which the Tokyo wallet will function via desktop is that transactions will be validated via your mobile phone as you make them. So if you make it's almost like a 2FA style thing. So if you make a transaction on the desktop, it'll automatically validate in your phone and allow you to approve it on your phone, which will actually be the signing mechanism. So that means you've almost got a TFA, a 2FA rather, so a two-factor authentication using your Tokyo wallet and using their desktop version at the same time, which we think adds another layer of security.
Yeah, that's interesting. That because I haven't heard of that before. So very innovative approach there, and I love it.
I don't think anyone's doing that.
No.
100%.
It is like a 2FA. It's pretty much the same experience.
It is. It's exactly the same thing. And it's mainly just because we wanted to add in a kind of additional layer of security. So we've been kind of working on that tech. And I don't think anyone's done that before. So, we're pretty excited about that.
Yeah, and it's pretty amazing that you guys focus on security because you guys could have put a desktop together in like 10, 15 minutes, right? That's how, I know Magic is really good, but you guys knew that, there is vulnerability there, and you guys don't want to put your users at risk. So you stayed on the mobile aspect of it until you guys figured out a way to make it, really safe for the user. So, I mean, pat on the back to you guys, for that, because that is really thinking about the user there for sure.
Yeah, for sure. Look, we've done a lot. We've only been in operation for 15 months in total. We launched Tokyo 15 months ago. We went live on Cardano with Apple and Android. We did a token launch. We launched on Bitcoin. We integrated all of the DEXs. We launched on Sui. We did that. We've got our credit card about to come out. We've got the layer one swaps coming out. We've got the cross-chain swaps that are built into the wallet. There's a couple of different providers there. We're about to release this yield product. We're releasing desktop. There's been, it's a very busy team. We've got, five developers in the team, obviously led by Magic Flow, and look, they're an awesome team, but we get to products in the right way, and we take our time to deliver the right product. We don't rush things out, and we want to be really considered. So although we deliver a lot, we really try to make sure that we're putting out great product and not rushing things out.
Yeah, and you guys actually went the hardest route first. So I imagine whenever you do add like SVM and EVM, that's going to be a simple kind of integration because you guys went at UTXO first. So, and I think that's actually going to be the wallets that win, is as many tech stacks that you can support securely. That's what I want. I want one-stop shop.
Well, I don't think, by the way, I don't think that there will be any other wallets, which is part of what we started with the UTXO chains, right? But there are plenty of wallets that, Ethereum Sui, for example, or Ripple ETH. But there are very few wallets that have Cardano, Bitcoin, Ethereum, Solana, Sui, and that they don't tend to have the UTXO chains, right? Yep. So that will be a differential for Tokyo, that we will have the UTXO chains as well as those other chains, but we have gone around it in reverse.
Which is good for your developer team, because you put them through the gauntlet first, and they got through that, so that's good.
they're the hardest chains to build on too. Like they're tough to build on. There's no question about that.
For sure.
Righto, guys, we're on the hour. Any closing thoughts?
Yeah, just for the audience out there, you got to check out products like Tokyo. You got to check out for the builders. You got to check out infrastructure like Maestro. Tune in if you are kind of learning about these type of ecosystems, because that's what the show's about, and that's what OnChain Revolution's always been about, is trying to educate as much as possible. Yes, onboarding is a part of that, but also don't get emotionally pulled back from the ups and downs of volatility. I know it's easier said than done, but stay focused and locked in and educated. And that's what we do here.
Yeah, 100%. And make sure you guys are tuning in every single Tuesday, 11 UTC. That is 7 p.m. Eastern time. We're going to do this for good, right? This is our new thing here. So make sure you guys are tuning in every single week and lock in, because we're doing giveaways every week, right? So it's going to be something special. Do not want to miss these, and bring your questions next week. I do think that with the markets being kind of crappy today, that's kind of why. But we do have 162 people in here, and I just want to say appreciate every single one of you guys, man. And that's our show. And Guido, any last words, buddy?
I think you've heard enough from me, guys, today. Peace out. See you next week. Same bat time, same bat channel.
Peace.
See you guys.
Peace.